the world. Welcome to Real Estate Radio Live, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much, much more. Now, here's your host for Real Estate Radio Live, Tom K. Wilson.
Thanks so much for tuning in to our Real Estate Radio Live program today. Your number one source of all of your real estate needs and education. We're the broadcasting from the number one business radio station in the San Francisco Bay Area, KDOW AM 1220, the Wall Street Business Network. I'm Tom K. Wilson, your host for the 2 p.m. Wednesday edition of Real Estate Radio Live. It comes to you Wednesday and Friday at 2 p.m. and Monday through Friday at 3 p.m. along with my co-hosts Joe Cachera, Mike D'Ambrosio, and Bobby Decker. If you can't make the live show, you can catch our podcast on TomWilsonProperties.com or on iTunes or on YouTube. And you can go to TomWilsonProperties.com for a lot of investor education information, sign up for newsletters, sign up for events that are coming up, find out what our latest products are. Wilson Investment Properties has both turnkey rental real estate houses as well as commercial syndications that we have available all the time. We welcome your questions and requests, and we're available for consultation. If anyone would like some thoughts and options and ideas about where they can take their portfolio. We have with us today one of my favorite people, Robert Campbell, who is with us about once a year on the programs. One of my favorite economists. He's a professional economist. He had his economics degree from UCLA and San Diego State as MBA. He's been in real estate most of his life. He had his first investment at age 24. He helped his dad paint and rehab products. He's done development and bought and sold a lot of products. He's got a very good reputation as a real estate timing expert. He has a wonderful book that you should get. He has a newsletter that I've been getting for about 10 years. And he comes and speaks around at various places. And he'll be at SJREI up in the Northern Cal on what date is that, Laurie?
June 9th.
On the June 9, if you're listening to this prior to that date of 2016. And with us to help co-host Robert Campbell today is Laurie Graymont, my good friend, who's the CEO of Summit Assets Group and also president of the SJREI organization, the premier real estate investment group in the Northern California area. Laurie, welcome back.
It's always a pleasure, Tom.
Thank you, Laurie. And Robert, nice to have you back on the program.
Well, those are nice things you said about me.
Yeah, guys, I think most of it's even true.
It is true.
Yeah, it's always
true, and I'm not afraid to say so. That I'm one of those people that if you like something and you're good at it, you just keep getting better and better and better at it. And after 14 years, after I wrote my book 14 years ago, Tom, I tell people, and it's true, I've doubled or possibly tripled the level of knowledge in these last 14 years. I mean, and you just get wiser, smarter. You talk to real smart people, and you get better and better at what you do. And if everything goes correctly, you have a chance in this world. Because I don't like to get overconfident.
And learning is fun, isn't it? I proudly tell people that in spite of the 40-some years of experience I have in real estate, there's not a day that goes by I don't learn something new.
Absolutely. Sometimes you learn little things. Sometimes you learn big things, and that's what separates the real pros from the real non-pros. And people have asked me at times, Tom, that they call me on the phone and they go, they're shocked that I answer the phone. They go, I can't believe you answer your phone. I said, do you know why I do that? And they go, no. I said, you wouldn't believe in the last 14 years some of the phone calls I've had. People that I knew about 30, 40 years ago, and I still follow today. Some of the people are in their 70s, 80s, and even 90 years old. And they're still in the real estate game. Not that they don't have a lot of money and could retire and play golf, but they love what they do. They've read me, and they call me, and they just want to discuss a few things. And there you go. You just learn more and more and more. So it's a fantastic journey. Just like you're on a fantastic journey. What you've done, Tom, in Dallas, Texas. I really respect that a lot. And you're living large today as you know, instead of only cash flow, now you're getting price appreciation.
Yep, indeed. No, it's a great journey indeed, and I know that you believe strongly in not only having a successful business, but if you pay attention and invest in your health, both body and mind, that allows you to be more successful in your business as well. And
Amen, brother.
You're a great example of that. So Robert, here we are again in a crazy spot where there might be some real estate indicators that say we're bubbling up, but we've got these subsidized interest rates and loans going on that mitigates some of that natural real estate cycle activity that should happen. You know, we love Doug Duncan's quote, the economist from Fannie Mae, who was on recently, and he says it's like a patient getting 27 pills from the doctor and asking what his prognosis is, and the doctor says, "I have no idea. We've never been in a situation like this before." So what do you?
I like that.
So what do you think? What do you think is happening here? In some scenarios, you could say, "Gosh, we've got to be in a bubble again," and yet we still have these low interest rates.
Down payments. I mean, Wells Fargo's now gone to their 3% down payment program for anything 417 and under.
Yep, and of course, I tell people if there's only one thing that I've learned over my years of investing, it's that the market is thousands of submarkets, so you can't generalize but so much. But if one were to generalize a little bit, talk a little bit about what kind of space are we in right now?
Well, we're in a very, very positive space for real estate, Tom. And even though that just like the stock market, a lot of people say it's not a stock market; it's a market of stocks. People use that same analogy for real estate, and they say it's not a housing market. It's each individual market varies city by city. To some degree, that's true, but to another degree, that's not true, because the individual cities, if you follow trends the way I have for the last 30, 40 years, that, the way very, very few cities, Tom, buck the national trend. Some may peak early and bottom early, and other ones, peak and bottom late. However, they all tend to go with the national trend. And the national trend right now is still, pointing up in a very, very strong way. In fact, even though it's a minor acceleration, price appreciation is speeding up right now. And frankly, I don't see anything that's going to change that in the near future, although something will.
Doug, I made reference to Doug Duncan before since he was here recently, and he said on his last two meetings with Janet Yellen that he was surprised to see how astute and aware she was that we had a shortage of product. And some of her questions to him were, why do we not have enough product, and what's that trend going to look like? So as long as there's a shortage of supply relative to demand, that's an upward pressure too, isn't it?
Yeah, that's another fundamental factor. And do you know one of the reasons, even though I haven't written about this, I'm going to write about it probably in my July timing letter. You know what's contributing to that shortage of demand?
What's that?
The shortage of supply? Is the fact that government regulations have added $35,000 in added costs to the price of a new home or apartment project.
So that makes de-incentivizes developers to either build or for the consumer to be able to buy a new house versus an existing house.
Exactly. I mean, the gap today between the price of a new home and an existing home is 4 miles wide, whereas in the past, a new home, I believe, only used to cost something like 10 or 15% more.
Yeah, about
Today,
15.
I don't have the chart in front of me, but it's much more. And it's those added costs, that extra $35,000 a unit that you've had to put on top. Therefore, builders aren't building like they used to, for that simple reason that people can't afford it. So building is way down. That's one of the reasons why I think that this trend in housing prices could go higher than a lot of people imagine simply because they aren't building new homes. The supply is diminishing and the demand is still strong, and that's going to push prices higher than I think a lot of people might imagine.
Robert, can you explain that $35,000 that you're referencing so our listeners understand where that's coming from?
What it is, I haven't built for 30 years. I mean, I'm as listeners should know, I'm the son of a home builder who built and developed for 50 years, and I built and developed for my own account for 10 years. And it's simply a matter of permits, processing fees, new fees that they're putting on the back of developers in order to get a project approved because the cities are going broke. We all know that. So, who to put the fees onto? The people that are going to be receiving the benefits, i.e. the new home buyers. And I can't detail what all those costs are, Lori, but I do know that the sum is close to $35,000, and it's a lot of little things that add up to that amount.
Well, I can attest for that as a builder.
Right. So, I know because I've been through that process, lived that process for many years myself, and went through it with my father. So I know, and that's what they're doing. And we all know that the cities are going broke, and primarily from the standpoint that they can't afford to pay the generous pensions that have been promised the retirees. So they got to make up that shortfall, that shortage somehow. And part of it is they're laying it on the developers who have to tack it on the price of a house.
Yep. Absolutely. And then they aren't hiring the staff to get the permits through any sooner. And so they're delayed 2 or 3 months from their promised dates, which is also a cost to the developers and builders.
What's the solution? What's going to change, getting more supply of product? Yeah.
I guess that pause says it all.
That's the answer. I know. It's a kind of, and it just keeps.
I could, you and I could discuss that for 4 hours, and we still wouldn't come to a conclusion.
No. I think the bottom line is that we've got, we just have a limited.
What it's down to is this: is the Federal Reserve Board, in order to keep the wheels on the car and to keep the debt machine going in the United States, and that's what's financing all the growth since 1980.
Yep.
They just have to keep essentially printing money, which is inflating things, which makes things even more difficult for retirees and everybody else to keep up. And that's why they're desperate for money right now. And, what we have to do is we have to solve some big structural problems. And top of that list is pension reform.
Before we get into that, Robert, we're going to run out of this segment. So good stuff we're talking about. Stay with us and hear about some of Robert's predictions and where he thinks things are and what different cities are doing. Stay with us, KDOW 1220 AM.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Tom K. Wilson.
We have with us in studio today Laurie Graymont, who's the president of SJREI, who's going to be sponsoring and hosting Robert Campbell, who's on with us today, who's our real estate timing expert and economist. And Robert's going to be here with us on June
9th and 11th.
June 9th, and then for a workshop on June 11th up here in Northern Cal. So if you're listening to this before that time, go to sjrei.org and sign up for both the evening and the workshop, because Robert has a wealth of information about real estate timing. You know what I like about Robert with my other very limited handful of economists is that they're right most of the time. They focus on real estate timing, and Robert, along with Dr. Doug Duncan and Bruce Norris and Sean O'Toole and Peter Schiff, all called the crash exactly right. So those are the folks you want to follow. Robert, we're talking a little bit about the rock and the hard place that we're in as a monetary system, and I know I've seen some films about how all great empires in the past crashed when they converted to fiat money, which we're on. So that's a little scary, but we don't know if that's tomorrow or if we're going to survive another couple generations. But if we keep the interest rates down and printing money, then try to keep the economy up, we create that inflation problem. But if we raise interest rates, then we might not be able to afford that. So what do you think? If you were dictator, what would you do monetarily for this country? We're kind of in a point of no return, aren't we, in some respects?
Absolutely, we're in a point of no return. That we're screwed if we do, and we're screwed if we don't. Yep. Because let's address first the low interest rates. Okay, the low interest rates have certainly buoyed the markets. The U.S. stock market is at or near record highs. The U.S. real estate market is at or near record highs. Yep. U.S. bond market is at or near record highs. That all sounds good. And the reason the Fed is engaged in its current monetary policies of essentially 0% interest rates is the fact that what they are hoping for is that when the masses see that all these markets are booming, that they will automatically have a sense of financial well-being, go out and borrow money and spend on things which will drive the economy back up to its robust potential.
We all like drinking our Kool-Aid, don't we?
Yeah, and the reason that isn't happening because they've totally misgauged what's happening, what these monetary policies have done to the population as a whole. With respect to, the Fed right now is saying, okay, we want to get at 2% inflation. They claim, the Fed claims that inflation is right around, 1.9, 2%, however you want to measure it right now. Those claims are false, Those claims are false, and if you just do some realistic, use a realistic gauge for inflation that measures the essentials of life, such as renting a home or buying a home, health care, energy, and what's the, my gosh, I draw a blank on what the fourth one is. Health care, the inflation rate isn't 1.9%, since 2000. It's 3.1%. So when you start compounding the essentials of life, they're getting more expensive at 3.1% more per year, and incomes are flat or maybe going up at 1% a year. That means the American consumer every year is falling behind 2%, and like it or not, Americans are having a hard time getting by and paying their bills. Most people don't like to admit that, especially if you're a guy. I ask my friends, "How you doing?" "Oh yeah, I can kind of tell it's not good," but they go, "Yeah, everything's fine." I know it's not fine. Guys today would rather admit they take Viagra than admit that they're having a hard time paying their bills.
And
a macho thing, but the statistics bear it out. The American middle class is shrinking because the rate of inflation, the cost of living is increasing at about 2% per year faster than their incomes, and that means they have less and less and less to spend, and that's why people are upset.
My good friend Tom Hopkins says, if anyone asks you how things are, you should always answer unbelievable, because that'll handle almost any situation. We have with us today Robert Campbell, economist and real estate timing expert, along with Lori Graymont in the studio, president of SJREI. We're talking with Robert about the economy, housing, where things are headed, what the factors are, and how you can make decisions based upon facts and information. So stay with us on Real Estate Radio Live.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com.